Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time, December the 2nd. Don't mind me, I am sipping my first sips of coffee this morning. While I do so, let's just peruse. I've never used that word before in my life. Peruse the economic data that has been released and what is set to be released because it's pretty big. So, yesterday we had the ISM manufacturing index come out with a slight miss. Construction spending, pretty good. Slight beat. In fact, a significant beat. Today, we have the beginning of jobs. In the end, everything in the economic world always comes down to jobs. And we have the ADP employment report coming out at 8:15 this morning, Eastern Standard Time. More Fed data vis-a-vis the Beige Book later on today. And of course, we have Fed Chair Powell and Steve Mnuchin, who have been strange bedfellows of late, testifying in front of Congress. But the real economic data. Good morning, Sam. How you doing, man? The real economic data comes out on Friday. And Friday is the pimp Mac Daddy of them all in terms of economic data, and that is non-farm payrolls. So today's ADP report sets the stage for Friday's non-farm payrolls. Have no doubt about it. Watch average hourly earnings. We're also going to get factory orders. So a fairly big week. Now, yesterday, we had a couple of events that occurred. And you could splice them together as being related. So what we're going to talk about today, besides economic data, we're going to talk about the pre-market futures. I'm going to go to that. I'm going to share with you a concern that I have. I shared it with members last night. And by the way, welcome new members, Jim and Mohammed. Welcome aboard. I see you put a note in the new Slack forum that we have up. Thanks for joining in. And let's go over the futures. And then we'll talk about the two charts that I'm concerned about as being along moving forward, because they're flashing a warning signal for the market. So stick around. So let's go to futures. 4-hour time frame. And I even mentioned the two charts on the podcast last night. It's on YouTube, on Podbean. You can catch it on iTunes and Google Play, or you can just simply watch it off of, listen to it anyway off of YouTube. All right, so let's kick things off with the dollar. The dollar was walloped. We hit lows yesterday not seen since 2018. And this morning, we're getting a bit of a reversal bar. Don't expect much here. Now, if we get a strong jobs report on Friday, maybe you'll see a continuation move higher on the dollar. I don't expect much. The dollar is, by and large, broken. Sam, Dixie is so weak. That article on zero hedge, no inflation, of course. Yep. Yeah, they're going to deny inflation. They came out core inflation as being flat last week. If I spend 100, government will give you 110. And that's in euros, right? Jesus Christ. That's a bubble, my friend. That's a government finance bubble. Scary. You want to take a look at the Euro USD on weekly? Sure. I'm curious. I didn't know they were doing it to that extent over there. Why do you think the euro is so strong in your opinion, though? Because it's really a banging chart. Euro's going a lot higher. This is a powerful chart. I'm sure that's coming here to some form of fashion. Maybe that's why they're selling the dollar, front running the event for more helicopter money. It's not. It's going to be such a horrible end. And speaking of horrible ends, what do we want to own, folks? Gold. Gold is up along with the dollar this morning. We began buying our gold mining position back last week very aggressively in the pre-market right at the lows. So we nailed that. And I think we're going up higher here. We may get a brief pause if the dollar really begins to resume I shouldn't say resume, if the dollar begins to move up higher. Bitcoin. You know, Peter Schiff has been saying that this is a mania. I'm not buying it. I agree with Peter Schiff on most everything except Bitcoin. Too many institutions now involved here. So Bitcoin looks as though we're consolidating. And we are going to get a continuation breakout fairly soon. So bullish on Bitcoin. Let's take a look at home heating oil. I'm looking for inflation. We appeared poised to break out a few days ago. Rejection. That doesn't mean it's broken. It just means it's taking a rest. It is up. Hog futures. I know this all sounds crazy to some, but what we're doing here is that we're debunking a myth that the Federal Reserve wants you to believe wholeheartedly. What we are right now as consumers, if anybody's familiar with the frog in a pot situation, how do you get a frog to stay in a boiling pot? You turn up the heat very, very slowly until the water's boiling, and the frog just got lured into a false sense of security. And that's exactly what's setting up here right now. Lean hog futures breaking out. Let's take a quick peek on a weekly time frame. We're going a lot higher here. Look at this. Stair-stepping higher. Major breakout, weekly time frame. This is protein. Going higher. Feeder cattle. Breaking out. Major breakout on feeder cattle. We haven't closed there yet, but we are very, very close. This is a weekly time frame again. Wheat. Taking a pause here. But, again, a weekly chart moving higher. Nat gas. It's bounced back the past couple of weeks. resistance at 3. Seems like only yesterday we were down in the mid ones. Huge rally here. Millions upon millions of dollars have been made in this rally. Palladium, look at this consolidation. Very bullish on palladium. But there's no inflation, says the Federal Reserve. And they'll probably reiterate that today as they go in front of Congress and tell the world, oh, inflation's a little bit light. It's not where we want it to be. Why do you want inflation? Isn't it good when things are cheaper? I don't know. You tell me you're going to raise prices on stuff, that doesn't give me the warm and fuzzies. Crude oil, holding gains. Let's go back to the 4-hour time frame. I think I made my point here. We are seeing inflation on the food front, on the energy front, although with the ag names, we're seeing a pause this week. That does not mean that they are broken by any stretch of the imagination. This is corn. All right, let's go to the Vix Futures. I'm going to talk more about this in a moment. Back to a 4-hour chart. We are potentially putting in a higher low. Here's our upper band of resistance. No breakout yet. Watch for a breakout above resistance. Watch RSI. RSI is setting up nicely here. W formation or a higher low bottom. We just ticked down a little bit here. Watch for a breakout. 4-hour time frame. S&P 500. And keep in mind, folks, these are intraday charts. We're not day traders here. We're looking at a macro view. So we have S&P 500 down along with VIX on a 4-hour time frame. NASDAQ 100 down 9.25 points. We're off the lows of the session. Potential head and shoulder setup on RSI. Left shoulder, head, right shoulder forming. Do we break the neckline? The Russell 2000. I think that out of the equity market, I should say, out of the equity indexes, again, first cup of coffee, first few sips, bear with me, give a guy a break. 5:15 in the a.m. Eastern Standard Time. I like the setup here on price, right? Nice consolidation. I'm not loving the RSI, but you can talk the RSI away because we've been in a consolidation. And this is very nice. It's very pretty. I don't love this. But again, we're in a consolidation. So you'd expect RSI to vacillate a bit. So, were to hazard a guess, I would have to say odds favor bulls with the small caps. What's the Nikkei doing? Ripping. Global markets are in fuego. Nikkei on fire. All right, let's talk about bonds. You know, bonds really took it on the chin yesterday with the yields rising. In fact, I want to go to the weekly chart of the 10-year yield. Folks, this is huge. Granted, it is only Wednesday. This is a weekly chart. A lot can happen, right? And please, as I'm thinking about this, join us tomorrow night as we go live, Thursday Night Futures Live. We're going to be revisiting this chart tomorrow night. And on Thursday nights, what we do is we go over the weekly charts to take a look at how we might be closing out the week. And that'll let us know, do we want to be positioned long, or do we want to lighten up on long trades, or do we want to get short as you proceed into the new trading week? So there's a link below. You can get alerted 15 minutes prior to us going live. If you're already on our email list, do not enter your email address again, or else you're going to get 2 emails and you're going to get mad at me. So don't do that, please. And if you don't want to enter your email, fine. Just click that bell button, and you may. YouTube is not very good at this. You may get notified when I go live. And subscribe to the channel, please. All right, back to the 10-year yield. Folks, technology does well in a declining interest rate environment. Doesn't mean it can't go up in a rising one, but it's not the preferred sector to be in. Yet, technology is what outperformed yesterday, and yields surged. Now, you may say, that's a tell, Bob. That's the market sending you a signal that, you know what, the economy is growing. Technology is going to do well in a strong economy, and we could support rising yields. Okay. We'll let the market dictate whether or not that's accurate or not. But speaking in generalities, normally that's not the case. I would rather be long of cyclical names in that environment. Banks, commodities, such as steel, of which I'm currently short, to be honest with you. I may have to exit that trade. Yeah, Qs, I haven't taken a look at Amazon yet. I'll take a look at it. But I think Microsoft is interesting as a short-term long. I'm bearish on Microsoft longer term. I think it's a bubble. But in short, let's close out this chart. Yields, major breakout this week, folks. Major. And if we start smashing through a one handle, the question's got to be asked. At what point does this market begin to buckle because it can't even stand a 1.5% yield? At what point does it buckle? It used to be 2%. So beware. This is a powerful, powerful chart that's setting up here. We have several trading days left to go in the week. This is not in the books, but man, very powerful setup here. It looks as though we're going to be seeing a one handle very, very soon on the 10-year yield. Now, while it's still fresh in my mind, I'm going to go to the Amazon chart because I want to take a look at what you're talking about. Because I haven't looked at Amazon. I want to make sure I'm not missing something that's interesting. Yeah, so, you know, here's one thing I don't like about, excuse me, the Q names, and that's this. I don't like the Stokes. They're down below 50. Generally, this doesn't end well, but this is a solid consolidation, and Amazon may just be victim of a consolidation here. I wouldn't be a buyer of Amazon until we saw a rally and a close above 50 on the stochastics. So looking at price, it looks bullish. Looking at money flow, looking at Stokes, it looks bearish to me. And the same holds true. This is a weekly time frame. Same holds true for Microsoft. We were down below 50. Looks like we pulled back above 50 on Stokes weekly time frame. Weekly chart still looks good. Money flow, not looking good. We have a negative divergence here. Remember, we put in a lower high a couple of weeks ago. Yet, we did not put in a lower low. So while things are looking interesting here, I don't think that we're out of the woods yet. Daily chart. I worry about a head fake. The daily chart looks okay. Where are my Stokes? They're rising. Let's check out AMZN. They're rising as well. So the daily time frame looks more constructive than a weekly time frame. If we get a breakout on the daily time frame, obviously if we close out the week strong, we're going to get a resolution to the negative factors that I'm looking at on a weekly time frame. So we'll see what happens here. But watch yields. Now, let's talk about the two concerns. I went over last night on the podcast. For the full video experience, go check it out on the members area. But of course, you need to be a member. Why is this not coming up? Because you selected the wrong chart list, Bob. All right, let's go to the VIX. I was asked a few days ago, do you think the VIX is broken? No, I don't think the VIX is broken. I think the yield curve could be broken. I think it's being managed, but not the VIX. All right, so daily chart of the VIX. This is one day. One day does not make a trend. But yesterday, we saw a bullish reversal bar on VIX. I mentioned last week that we would probably fill the gap either between 1999 or 1821 on the VIX. We did fill the 1999 gap last week. Now we are potentially, no guarantees, potentially putting in a higher low. Now with VIX up yesterday, you would have expected to see a down S&P. Well, we know that that was not the case. The S&P 500 was up, and it faded on the day. And every time I've gone over this in the past, it generally doesn't end well for equities. Maybe it's just a one-day anomaly. But beware. Be very, very aware that whenever I've seen this, whether it's pre-COVID sell-off when we went short the market, we were seeing S&P 500 trade up along with VIX, or whether it be a few weeks ago. Generally, it doesn't end well when both VIX and the S&P 500 are trading up. It doesn't end well for equities, to be specific. All right, I'm getting along in the tooth here. I have some chart requests to go over from members, and I will say, have a good day to everyone. All right, let's see what we have. Let's use TrendSpider. They extended their 50% off sale Use the link below. Don't use my discount code, but just use the link below. All right, let's see what we got. First, OPTT we did for Franklin yesterday. OPTT, let's go over it again, see how it closed out yesterday. I still like, this is a monthly chart. I still like OPTT longer term. It's holding the breakout. In fact, as an investment, this may just be a buy. I did a video on it back here. I said it was going to sell off, but longer term, I like the setup. Weekly chart. Same deal, weekly time frame. If it breaks $2.52, then it's in trouble. It needs to hold that support level. Not a horrible close yesterday, but I'd like to see it retest once again. I think this could be bought with a tight stop below. We waited for the pullback, got the pullback. Where are our Stokes? Stokes are declining down below 50, not wonderful. I would allow these shares to consolidate sideways, resolve this negative momentum, and then get long. If you want to scratch the itch, stay small, that's fine. Add more on a confirmation that this support level at $2.40 is going to hold. And with that, folks, I'm going to say everyone have a profitable trading day. If you could smash that like button, I'd really appreciate it. Sam, be well. And I will talk to you tomorrow night on Thursday Night Futures Live. Again, use the link below. Join us. Get alerted 15 minutes prior to us going live. And I'll talk to you soon. Be well.